Good morning and welcome to a weekday report of the stock market. So we try to answer three simple questions, that is what happened, why it happened, and why should investors care. This is not a stock tip channel. We don't tell you what to buy or sell. This is just a channel to keep you informed and be better educated and informed investors. So if I had to summarize today's market, it would be that lower crude oil prices, easing concerns, and U.S. interest rates being eased, improving global sentiments towards supported Indian equities, and focus shifting from macro events to quarter and earnings season of the corporates. Today's seven stories that matter. Indian markets are expected to open on a positive note because Gift City is indicating a firm start after Thursday's gain, suggesting that positive global cues are carrying into today's session. Crude oil prices remain low because of the ease of the indirect US Iran negotiations. Um, the US job market is changing expectations. A softer US employment report has reduced expectations of an immediate interest rate hike by the Federal Reserve. That generally supports risk assets such as equities, making it more attractive for investors. And we'll explain more about it later on. And IT stocks are showing signs of recovery. Um, India's IT sector rebounded strongly yesterday. Investors will now watch whether this develops into a sustained buying or remains a short spur. Okay, and then quarterly business updates begin. So the market is entering the first phase of the earnings season. From now on, company-specific announcements can become more influential than broad market headlines, like mentioned before. And lower oil prices and easing macro risks have helped improve confidence towards emerging markets, including India, although investors still remain selective. Um, Global markets remain cautious, not fearful. Investors are balancing optimism with uncertainty. The mood is constructive, but markets are still reacting to every major economic data release and central bank signal. And quick trip around the world is overnight. Wall Street delivered a mixed performance. Dow Jones managed to hold firm, while Nasdaq came under pressure because of semiconductor and technology stocks, as they saw major selling. At first glance, that may sound negative, but on the bigger story wasn't the stock market; it was this U.S. labor market. Fresh employment data suggested that the growth is slowing. Normally, weaker economic data raises concerns. However, markets interpreted it very differently. Um, because a cooling labor market may reduce the need for Federal Reserve to tighten monetary policy. In simple terms, if inflation is in check um, and the economy cools gradually, central banks have less reason to increase interest rates or to raise the interest rates. So lower interest rates generally make equities more attractive than fixed income investments. That's why today's global market reaction is more about interest rate expectations than the jobs report itself. And across India, trading sessions have been mixed. Japan is seeing some profit booking after a strong rally, while broader Asian markets are relatively stable. The absence of panic itself can be considered as a positive signal for the Indian markets. Oil in the last few weeks, the market has been watching Middle East very closely. Reports of the progress in that indirect US-Iran talks has helped Brent remain around $70 per barrel range. The key point is that oil is no longer as a headwind is no longer acting as the headwind as it used to a few weeks ago. So, what should Indian investors expect today? The overall tone appears constructive. Positive global cues, softer oil prices, improving sentiment, and are supportive for the market. At the same time, investors are likely to become increasingly selective as the quarterly business updates and earnings seasons begin. Rather than chasing headlines, today's market may reward companies that deliver strong business updates and resilient earnings expectation. So, what is the way forward? If they have the market future prediction is good, then it generally indicates better performance, better reliability, and that could interest investors. One thing to watch through the day whether the strength broadens beyond banking and IT into mid caps and small cap stocks that can provide you clues about the depth of investor participation, although it's only one of the several indicators of market sentiment. Corporate ladder. Uh, as we enter into the beginning of Q1 earnings season, investors should remember something important. The market does not react only to result, as I mentioned before. It reacts to expectations. So let's not only look at the how well the company has performed or what the numbers are, higher profits, but let's look at the management and what they have to offer, whether there are listen to and understand their commentary on demand trends, export outlook, raw material costs, capital expenditure, margin guidance. These will help understand what potential a company has or a stock has. So that should be looked at keenly. And another theme to watch is a lot of IPOs coming in July, so that could help investors get the boost that they require. Um, Finally, keep an eye on the exchange filings throughout the day. Large order wins, acquisitions, promoter transactions, and regulatory approvals can all create stock specific movements, even on a quiet market day. Mm, let's look at sectors. Banks continue to be the stronghold pillar of Indian market. With crude oil easing and bond markets relatively stable, financial stocks may continue to attract attention. Investors are also watching whether improving liquidity and lower inflation expectations translate into better credit growth over the coming months. It's very self-explanatory. Information technology, they had a short spur yesterday. Investors will be keen to know whether that was just a momentary or a long-term thing, and it really will engage and attract investors. Automobile sector has continued to benefit from the softer crude oil prices. Lower fuel prices can improve consumer sentiment and reduce logistics cost across the supply chain. Investors will also watch the monthly sales trends to gauge the demand. FMCG is again majorly dependent on the southwest monsoon. Hopefully, that improves and you can see a positive impact. It doesn't mean that 1 week of rainfall will update changes in the outlook overnight, but it remains an important theme through the quarter. Capital goods, government infrastructure spending, and order announcements continue to support long term interest in that sector. And recent market commentary that easing oil prices and improving market conditions have made India more attractive to global investors, although they remain selective. They're still selective. The FIIs are still selective about India and few emerging markets, but definitely it looks more attractive now. Um, Policy and regulatory watch. There is no major RBI policy announcement scheduled for today, but however, markets continue to assess the impact of recent RBI measures aimed at supporting liquidity and attracting capital. Um, Events to watch global, any fresh US developments on interest rate expectations, updates from Middle East that could influence crude oil prices, movements in US Treasury yields and the US dollars. In India, Gift City after opening, institutional buying or selling trends, corporate announcements and quarterly business updates, any significant exchange filings, progress on any IPO subscriptions in primary market. I think that's it for today. Yeah, three things you should focus on is one is oil prices. Any sudden geopolitical developments can quickly change the market situation. Foreign investor activity, will foreign investors continue showing interest in Indian equities or will they remain cautious? ahead of more global economic data and corporate announcements. We're entering earnings season as mentioned. Every management commentary becomes important from now onward. Remember, sometimes one sentence from the CEO can move a stock more than the entire quarterly report. Um, so let's summarize. Lower crude prices. Today's positives include lower crude oil prices, improving global sentiment, strong participation from banking stocks, IT attempting a recovery, and things to be cautious about is global interest rate expectations, geopolitical developments, corporate earnings, monsoon progress. Um, and rather than trying to predict every market move, let's keep asking what has changed since yesterday. So let's not, our motto should be not to chase the market but to understand the market. I hope you understood and learned something from today's session. If you did, please do like, share, and subscribe, and help me give you pre and post market reports on a daily basis on each market day. Thank you for your time.